Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market rebounded strongly this week as a buying panic hit on Friday as the job numbers looked very weak. We got the ADP number on Wednesday, which showed an increase in the private sector of only 27,000 jobs, and then non-farm payrolls on Friday came out with an increase of only 75,000 jobs. That's like 100,000 or worse below what was expected. Unemployment rate still sitting at 3.6%. Market got helped during this week by Fed speak that suggested we could see a rate cut soon, and the markets are really saying that when you see what's going on in the bond market and how low yields have fallen. The Fed may not have a choice when it comes to the market pushing the Fed. The stock market was very oversold and had fallen 225 points in just a very brief number of weeks. But then we saw a monstrous rebound in here this week, as in just a matter of a week, we saw a 150-point rally in the S&P 500. So 2,000 down in the Dow and a big rebound in there also. And it's just been an unbelievable weekend here as buying came in so strongly. The majority of stocks that we follow were, in our opinion, in bottoming areas and were very oversold, and a bounce was due. This bounce in here is very significant. We're going to talk more about that. And a lot of stocks to us look like they've made very important lows in here. Big news came early in the week, and that brought a sizable dip as Google was attacked essentially by the Department of Justice, bringing an antitrust probe saying that they essentially have ad dominance. And then the same thing happened to Facebook, Amazon, and Apple as the Department of Justice looks at them for antitrust issues, saying that they have a monopoly or potential monopoly. When you think about Apple, they have 15.8% of the phone market with their iPhones, and that's not exactly a monopoly if you ask me, and they may be looking at the situation of their dominance in the app market, and they were certainly the leaders in that market, as they're the first ones that came out with the open architecture, and just the app market just exploded. They should get credit for that. It just shows you all you have to do is be really successful in this world, and all of a sudden fingers are going to get pointed at you like you're really the villain. You do well, somebody's going to want to take it away. It's a sad situation. Big break came on Monday also on the situation with Mexico, as the president has said he's going to put a 5% tariff on them unless they help with the immigration situation, people crossing our border illegally, and threatened to take that all the way up to 30%. Well, the Mexican government immediately sent a delegation, and they really want to head that off, and I actually think that there's a deal going to come on that very quickly. Rumors came that there was a deal, and that helped the market move up midweek, and then again, as I said, accelerated so strongly here on Friday. More Fed speak during the week, late in the week, also helped as they really talk out of two sides of their mouth, because on one hand you hear them say, well, we don't really need to do anything, and on the other side they say, well, we're ready to do something if we need to, especially if the world economy is slow due to the trade war that's going on. Investors, they just seem to focus really strongly on these lower rates in here, and that prospect that we'll see the Fed act. But we have that already, really, as when you look at how far down these rates have fallen, and we have this inverted yield curve now, which is the 6 month and out to 10 year inverted by about 9 basis points. So we have a situation where the threat of recession is there, based on what the markets are saying, and that has got investors just thinking there's just like no way that the companies aren't going to benefit from that, and they are just absolutely forcing the Fed hands, this bond market. I think we're going to see something. So yields fall down as low as 205 in the 10-year. They're about 208 right now, and 2.08. Can you imagine that incredibly low number? Well, we saw them a lot lower, like 1.35 during the real crisis. No matter the trade war or the debt bomb or the pending recession or the collapse in oil and copper that we've seen, which indicate the slowdowns are so severe, all investors really care about is that we've got more fuel coming that has driven these markets for these 10 years, and that's the Fed printing, central bank printing all around the world. The Europeans today, Draghi came out this week and he said that they were going to extend their current policy all the way out to mid-2020. So we have this manipulated markets and false pricing and false numbers all over the world. Doesn't matter, because that's what has given the investors hope over all these years, and are continuing to do so now. It's fine with me, because really looking for a June low in the market for the big sell-off we got, and then a summer rally. Well, now when we look at this and the intensity of the rally we've gotten, I would say that the summer rally has begun. We had looked for around the third week of June as the time period for the low, and we still could get a decline in the market that comes down into levels I'll show you in the short-term view coming up at the end of the show. And we could even get a test of the recent lows at 27.27. It's a little far-fetched right now. It's more likely that we will have a pullback, and maybe that will be sharp. And we buy it. We think that that's going to give traders and shorter-term investors, maybe with a 2 to 3 month perspective, a good opportunity for what we think has a summer rally that's here right now and is likely to continue. We think maybe out into September is the potential for that. And then I think that will provide an exit. The question is, will you or other investors get hooked by what we think is this good summer rally that we see right now? And we think it'll be good enough even potentially for new highs in the stock market. That's what we said months ago when we thought we'd get this decline into the summer, that we would have a better time after this June period, and we think that that's where we are right now. The question is, if you get hooked, then you probably won't use the coming rally to the advantage that I think that we need to do. I'm very far from a doomsayer. I'm agnostic. I look at the markets, I see the patterns, and I act on them, and I try to share that with you also. I actually think that this summer rally that we're going to get here, which is likely to get to new highs, is a good opportunity to go to cash and gold. So get ready. I just want you to have that on your radar and not mistake this for some rally that may just go to ridiculous numbers. I don't think so. I think a summer rally is starting, and I think when it ends, it's going to be a big ending also. So the stock market for the week moves up about 4%. It was just a rocket to the upside. The Russell a little bit less than that, lagging by a little bit. The bond market gains about a half a point. It had such a strong up move previous to this, and the 10-year yields fall about 4 basis points. to 208 right now. They had been as low as 205. Gold market soars as the dollar weakens, with the gold up about $35, making our near-term objectives easily. And that dollar, which is down greater than 1% on the week, is moving based on the crashing interest rates that we have seen. And while you'll see in our analysis, and if you watch Future Speak, you'll see our longer-term analysis for the dollar, while we think that this decline in the dollar is not over with, probably it's going to get into a period where it can do a little bit better also over the next couple of months, setting up what we think is going to be a nightmarish period for the dollar going out in the third quarter, fourth quarter for this year. We think it has a chance to really get hit in a very big way. Of course, that'll be a good time for gold. And like I said just a moment ago, when the stock market peaks, I think it's going to be a giant time for gold after that. Oil had a big drop, fell all the way down to $50.60. That was from the high 60s, and it did that very quickly. Now rebounding to about 53.50, which gives it a very small gain for the week. That is the opening, and I'll be right back, and I'm going to show you my best stocks and worst stocks for the week. What I want to show you in here, I'm turning a blank in here on my charts. There they come. Okay, what I want to show you in here is our weekly analysis on the 5 best and 5 worst stocks for the week. That is a little different than the way we used to do it. I brought you more stocks before, but now I'm kind of picking out the ones that I think have some of the best patterns and maybe the most unique patterns and the greatest opportunity. The chart I'm going to show you now, Sienna, it's in the networking category. Its cousins are Juniper and Cisco. This is a stock that has got what we would say is beautiful cycle motion or harmonics that we see in here. And you can see that chart right over here. And I'll give you a little sense for our weekly charts and what they look like. So if you want to get these charts right on your platform with my work on them, you can become a level 4 member. You need to be Thinkorswim, TDAR preferred broker. And you can see in here the cyclicality. So there's a minor cycle and a dominant cycle pattern that we have identified in here. The dominant is really the big one, which is very clear in our eyes. And when you see these two blue spikes, that's where our timing low is projected. And you could see right over here how that low came right on time. This stock soars 30%. Earnings are very strong. Revenue's a big beat. Analysts upgrading targets. Now, when a stock breaks below the 78.6%, the probabilities are low that it's going to make this previous high. It's more like about 25% than if it had held up at higher supports around the 61.8 or 50%, which would have been out in this area. So this is an unlikely occurrence, but still you can see the upward stair-step pattern and the bullish positive configurations that you can see, which suggested it was still a positive stock. And you can see this massive upward move. Now, what it looks like is it hits the fib target zone. This was cool. This fib target zone right over here was created by this cycle. This fib target zone here created by this cycle. So it gets up right to it there. We think the top of the fib target zone over 48 is a likely occurrence for the stock, but this is a very big move, and I wouldn't be surprised for it to rest. But if it pulled back, I think it is a buy. Sienna up 30% in an unbelievably great move right there and a great pattern. CSIQ is the next one we're going to look at in here. Now, this stock moves up very quickly to the resistance zone, about 16% up on the week on some new contracts. I want you to note that we had this as the buy zone. Now, it just edged under it by just a little bit. And also, when you see the blue dotted cycle bracket on the bottom, that identifies what we have seen as a shifted pattern going on. So you have this cycle elongating, and this low came right over here. You can see that perfectly. Then it rallied, and this fooled us. We would not have expected this to happen. This is a lower probability occurrence, yet sometimes cycles do shift, and then once it gets out above this high right over here, it really confirms to be very bullish. This is a resistance zone, and I wouldn't be surprised to see the stock stall in here a little bit, but we really like it. Cheap stock, 9 PE. It's expected to earn $2.74 in 2020. That would put it out at more like a 7 PE. And this stock tends to trade a little cheaply, but this is a bullish pattern. We think if it gets through that level right over there, that's about 22.40. It's very likely to test this level up here just close to 26. So note that it's only in the second week of the rally right over here in this new cycle in the rise. Stocks like this do not top in the second week. That means if it pulls back, you get a buying opportunity, and we think the stock is going higher. We're going to say it breaks through the resistance and makes it up to the 26 area. Tesla, TSLA, is the next one we're going to look at, and I bring you this one because of the significance of the trading pattern and the fact that it did have a good solid 13% gain on the week and has this Morningstar pattern that's forming right in here. So I want you to note the really small cycle patterns, the minor ones right in here. That's this one here, and this one right here, and then this one right here that bottoms. The probability that this is a major bottom is small. Now, the supports in our projection in here was to get below 178 down to 165. The low was about 177. And now has got this rebound in here. Our objective in here, based on what we see, is for it to make a brief trip into the sell zone. That would put it up to 222 to 236, and that's where we believe you sell it for another move to the downside. Piper Jaffray came out and said there's not as many worries as people are saying about the Model 3 demand, and they think that is overblown. That's helping the stock. This is a good place for it to get a rebound. But again, we don't think this is the bottom. We think it is in around this timing of the blue spike, which is right there around the beginning of September to mid-September. And we think the rally right over here is a fake and will give you a shorting opportunity over $222. This next one I absolutely love. This is American Airlines. Now, there's the chart looks a little bit messy, and that's because there's a lot going on in here. This diamond consolidation that it broke down from right there, and that was all living within this cycle. Now, we have marked off the minor cycles that you can see. And look right here, what it got down almost to our fib extension level that was right down in there, almost got there, and now gives you this engulfing right here. Now, we think that this is a significant occurrence. This is the first week of the cycle, of the new rising phase of this cycle. This is the intermediate resistance right over here. It takes you between 32 and 33.30. I think it's going to blast through there, to tell you the truth, because this is a strong velocity move right here in the first week up on this engulfing. I think it gets beyond this level over here, 37, and it just breaks out of this whole pattern. It's been in this long downtrend, as you can see, and I'm going to call this a major bottom, and that we're going to get a very significant move to the upside. It lagged the other airlines, and in this case, American Airlines, I think, is a screaming buy. And pull back a little bit. It would be nice to get a little cheaper entry, but it doesn't have to, in my opinion. I think it's a great spot for this stock, and I think it's going to go higher. Up 14% on the week, and let's look for prices over 37 and beyond. And the last one we're going to look at in the best five is Skechers. This is not a stock that I have loved overall, and you can see it had a major move from 43 all the way down to 21, cut in half. But then it had this great cycle pattern right here. So you could see the negative cycle right here, the negative cycle right here, and now the positive cycle. This is a base. This is essentially a big inverted head and shoulders. The target zone from this cycle is way up over here at 39 to 42, and that's where we think it's headed. So it's now $30.56. It's now very early in this cycle move to the upside. You can see this right over here, lasted 2.5, 3 months on the upside right over here. This one, even in a negative cycle, lasted over 2 months on the upside. And look at this one right over here, which blasted to the upside on the first week. It continued up for another 3 months. This, to me, is the beginning. Remember, I'm calling for a summer rally for the stock market, and this is a stock that should perform well. When you get into the buy zone and hold and then move up, the probabilities are better than 75% of exceeding the last high. That puts it over 35, 39, 42. Those are all my numbers right there, and I think it's going to move significantly to the upside. Skechers, a very, very nice stock, up 10% on the week, and a perfect spot for that bottom to come in. We like that very much, and I think that Skechers is a buy. Next, we're going to take a look at the worst stocks for the week, and I think there is going to be not many of them to look at in a week when the S&P 500 rebounds 140 points. All right, for the worst for the week, we're going to start out looking at GameStop. We've reported on GameStop quite a number of times. We've seen the patterns as being negative and talked a lot about the business model being a problem and the fact that it was the stock was trading at incredibly low earnings, incredibly low PE, 5 PE, 6 PE, and we called it a value trap. Wondered about that, and that certainly is proving to be true. This is the GameStop patterns in here, and what you can see is that we're at what should be a bottoming area. Now, the patterns in here have been pretty consistent. You can see the where it projects to a low, you get a low. Projects to a low, you get a low. These rebounds didn't last long as the sellers continue to come in. Now, we're in this area right here, or have run past it by a week or two. We're expecting a rebound to come. So the stock made a low here of 471. That is really incredibly low. We would expect when you get something like this that it only makes it down to around the 20, makes it up to around the 23.6%. So we're going to put that in here for you right now so that you can see. And this kind of looks like it could rebound up here all the way to around $7.66. That would be an extraordinarily good move based on this price, but we think that any rebound that we get in here is very likely to fail, and it's very possible that we'll see it hit this extension zone, the 261.8, down around $2.50. So we're looking for it to fall under 3. This is a very sick pattern. It's been that way, and we don't expect it really to improve. Their horrible earnings is reflective of the fact that their business just simply is collapsing, and their dividend has been dropped. So the company in a lot of trouble, 32% decline on the week, and that is a horrible story. Next one is Abercrombie ANF, and you can see in here that it has, when we reported this breakdown right over here, underneath this level, that really was a big warning, and you can see it just collapse under that. So here's some major cycle low support right there around $15. But you can look at the pattern in here. It says that you don't really get the low until end of August, beginning of September. So I think if it got a rebound there, it's going to be in a lot of trouble still, and it would be a sell. Mostly what I have to show you is retails. I'm going to show you a few more retails. So Abercrombie down 9%. Gap stores in the same teen retail category. You could see how sick that is. It just has shorter patterns, and it calls for a low out here in July. So we would expect that it would not be able to hold a rally here. 4% down on the week on a very sick stock. Note what happened in here, that it got this pop-up right over here on an earnings occurrence last February, and it gets into this major resistance zone and immediately collapses and continues to move to the downside. So it's another really sick retail stock. And retail mostly is in a lot of trouble. A lot of the bad ones are reported in a special video a few weeks ago have remained bad. Now, this is a very interesting stock. Now, if you like to be a bottom picker, and it's not my style, this one down 2% on the week, and I think it's worth a shot because you see you have a major support right over here. And this big break came as their guidance was really weak. Abercrombie, which fell 36% in 2 weeks. This one not doing much better than that in the last 3 weeks, as it has this really monstrous decline in the last month and a half. So it got up to 75. It fell all the way down to 47. So you'd expect a rebound, right? Well, here's your area of targets up here that we expect. The stock could rebound its way all the way back to 60. So you see the cycle patterns right in here. The low occurs right here. The low due right over here. And then the rally due. Do you want to take a shot? This is probably a spot, and I think it may be worth it. At bottom picking, like I say, and when you buy these falling knives, you could get in a lot of trouble. But I think the risk rewards are good. I'd be surprised to see it under $45.50, and I wouldn't be surprised to see it rally up at least double that on the upside. So we'll give it a 2 or 3 to 1 risk reward to the upside for a rebound into that sell zone area. And again, it's a risky play, but we still think it's worth a shot if you're a gambler. Here is the last one we're going to show you in the worst of the week, and I'm picking these out because they did move to the downside, but they give you opportunity. This is RIG, down about 4.5% on the week. Transocean in the driller category. As the oil plunged, so did the oil stocks. The drillers tend to do really poorly during those periods. I'm going to show you that I think that light crude is in a rebounding period. I think that these stocks will rebound. It's only a little $6 stock right over here. It traded down to $5.87. Our upside objective in here, and again, this is a shot, is to around $7.30 or a little bit higher on a rebound. So that's a pretty good percentage gain when you think about that, nearly 20%. And I think it's worth it. Risk rewards, I think, really favor you're going to get some kind of a rebound in there. Now, you want to look at cycle analysis and say, well, how does that help you risk reward wise? Well, first of all, this dashed line is the OIH, which is the oil service ETF. And this sometimes is in line with it and sometimes not. Well, right now, you can see that it's kind of out of sync with it, but when you look at the black line, which is the cycle brackets for RIG, R-I-G, each time you get to these bottoming periods, no matter how bad it is or how good it is, you do get rallies, as you can see. So the rally right in here, the rally right in here, and that's where we are right now. I'm bottom picking on this one also, but I think it's a good risk reward. I don't think you can lose much on the downside. You know, I'm calling for a 20% gain. Maybe you got a 10% risk on the downside. You can stop it out at, $5.50 or $5.20, and I think have a pretty good risk reward that you're going to be in a profitable situation over the next month or two. Remember, none of these are buy recommendations. I am just simply sharing with you my overall analysis and trying to give you what I think are the best risk-reward situations. That is the worst for the week, and I will be right back, and I will give you our short-term view for the coming week. All right, short-term view for the coming week. We look at short-term charts, the daily charts, and do a projection. I usually give you an accounting of how I did the previous week, but I was on vacation and not here. 2 weeks ago, though, was really good, and I don't have the numbers for you, but we were way over the 60% number in what we called on these markets. So I'd like to get to 60-65%, which is about 2 to 1. correct, and then you're in good shape. I measure how I do based on cycle patterns, support resistance, how much I think they're going to go up and down, or if they're going to go up and down, and I rate myself pretty critically. Don't want to not have credibility because I don't take a good look at what my analysis is. So we're going to have a chance to do that next week when we review what I said this week. We'll take a look first, as we always do, at light crude /CL. Again, we are looking at daily charts, and what we want to do is we want to use the rhythms in the market to project what we believe is going on in the market. This is an interesting chart because to us it has a very clear what we call minor cycle shift for those of you that are students, and I encourage you to watch our cycle analysis workshop. If you want an introduction to it, just go to our askSlim page and take a look at that cycle analysis workshop, and there's a free video in there to explain it to you, so I think it's worth it. And here you could see the harmonic families, and these would suggest, as did the weekly, that a low would be coming over here at the middle of May. However, you got this little rally in here, and then it broke down again. So we have what we have is this full minor cycle shift right there, and that's the dotted blue line that you can see. So now what we have is the minor cycle pushing up, and you could see the bottom that was made in here by this engulfing. And what we're calling for is a rally. Now, I want you to be clear. We're going to always look at momentum as a very key aspect of this analysis. Momentum turned negative here, and that brought that collapse of $10 more once that happened on the downside. Momentum is still negative. That means that this has to do work. If it were making a significant bottom, that would mean you could get a rally, but then probably pull back again after that. We're going to call for a kind of a choppy up week. Test this resistance level. We'll call the resistance around 55.60 to 57 and a quarter right over there. That's the area that I think it would really stop if it got some rebounding going on, because it looks cheap, and we would look for it to fail from there. Because of this pattern that we believe shifted over, I don't label this a sell zone, even though I do think it will decline from there. It's just I don't put sell zones early in the more dominant cycles. They just don't bear a lot of fruit when you do that. So, but I believe it will stop in this area of resistance. We'll get an attempted move to the upside. We'll call it a choppy up week for the light crude market as it does rebound into that resistance area. Next thing we're going to look at is the gold market, which had a great week and followed patterns beautifully. You can see in here, I'll just blow this out so you could see these beautiful harmonic families in here, and this big gold dominant pattern right there that I'm pointing to. You can see the low right here, the low right here, the low right here, all bringing those big rallies. And that's what happened right at this time. So very messy chart when you until you expand it out, and then it's still a messy chart because it has so much of this analysis in there. It's got silver in there also, which bottomed right here and helped the gold market bottom. Now what we have is this big shooting star, and it's showing some rejection up in this level. There's a cycle peak resistance right here at 1361. We're going to look for it to try to get there and then chop and roll over. Part of the reason that we think that the gold market is going to stall right now is because we think that the dollar market is going to rebound now in a minor way. So we think we'll get a minor pullback in gold, and we think we'll get a minor rebound in the dollar. I'll show you that in a moment. This area right over here, this is around 1323. This is 1314. This down over here is 1304. All of this, in our opinion, is a buy zone. And were you to get some corrections down into that area, if it happened this week or if it happened out over here 2 weeks from now, that doesn't matter to us. We think that is the area you buy it, and that the gold market will move back up. I was long a lot of gold and gold stocks. I have lightened up significantly based on it getting up to this level. still long. And I don't mind losing on my long positions now because I want to buy it if it moves back down into that support zone. We're going to call it a small down week, going along with what we think will be a bounce in the dollar coming up. And I'll show you that right now. The dollar sign DXY. There you go, right here. You can see here as the gold market rallied, of course, it was helped by this decline. The dollar is declining very sharply in here, along with yields. Money travels around the world based on the movement in interest rates, not so much the numbers in interest rates. So money is moving sharply into the yen and out of the dollar, but the yen is at a negative interest rate policy, and we're at 2%. You would think money would stay here, but it's not. The way it works is much more about the direction of interest rates than it is about the exact numbers. So right now we're looking for a bounce in here, and that bounce should get you up into this declining zone right over here. So that zone right now comes in at around, well, the bottom of it, let's look at the first stop here, the 23.6%. That's at about 96.90. That should be fairly easy to get through in a rebound, and then the next number right over here is around 97.20. So this is kind of the area we expect it to move up into. That's why we think that gold will give some ground during this period, but then we think the dollar will move down again after that, and then gold will move up again. So this doesn't last long. Maybe this is a week or week and a half to the upside, and then we think it'll be moving down again. So we'll call the dollar a rebound, a small up week, and fighting against negative momentum right in here, which is going to really keep the dollar from being able to have any kind of a major move. So the bond market, we look at the ZBs, the 30-year in here, and you can see the, again, harmonic families. And there is a corrective period coming in here. So this is the next week or week and a half where you have the minor cycle joining with the dominant pattern for a corrective period. That's right in here. Now, what's important is that bonds and the stock market are moving together right now. They have linked up as focus is on interest rate. So this decline in here, or the increase in yields, and for those of you that watch Future Speak, you will be able to see that we're looking for yields to move up. This period right in here is pretty likely to bring you a decline in the bond market. It's likely to be minor. Again, you have momentum as positive, so it's fighting against positive momentum, and it's very late. We call this a right-hand translation, which is bullish, and that what means is that it gets down into these support areas and then moves up again. That's really what we're looking for, is just a minor decline. We're going to look for a correction down to about 150, 110. That's the top of this 38% fib confluence area over the next week or week and a half. So we'll call for a down week in some, minor way, and that 5110 is not giving up a lot of ground in here. It's just not quite 3 points. I guess you might not call it minor if you're trading for $32 a tick. So that's maybe a good opportunity for short-term traders. And I think it's highly likely that we're going to see it give ground in here. Big move, and late, and very likely that will bring you a decline. When you look at other similar periods in here where you get to the bottom of cycles, that's this right over here and this right over here. This one was very bullish, and it only brought you a minor decline. Let me just grab this so it's a little clearer here and get through that mess. This one was a minor decline right in here, and this one was a minor decline really sideways. So when you get these patterns that are so bullish, you don't get very big declines. Maybe 3 points is optimistic on the downside for short-term traders, but I think you're going to get that downside move in the bond market. So now, of course, we'll talk about the stock market. Don't forget, follow me on Twitter at askSlim, and subscribe to me on YouTube And also, please do go to the askSlim site and look at our memberships there. It's you supporting us in the memberships is what allows me to keep bringing this show and allows us to keep developing some amazing products. We have some offerings and enhancements that are coming out in the next couple of months and starting really in the next couple of weeks that are going to blow you away. Just some unbelievably great analytical content that is, I think, going to make a very big difference to you. So please go look at those memberships, and we'll be launching some very important things coming up soon. So I'm excited about them, and I know you will be also when you see them. So now let's take a look at the stock market. We're going to look at the SPX, which has had an astounding rebound in here. I have basically been rewriting and rewriting what I'm seeing in here as the market rebound has occurred. So I'm really going to call you people that are students of psychoanalysis to look at this because there's some important things going on right now. So here is that daily chart of the S&P 500. And we have a very nice looking rebound in here that will, well, how about astounding? We had this break from 29.54 to 27.27. So that was roughly 227 points. We have had a rally in just 4 days of about 150 points on the upside. Now, that has taken it through all of the minor resistances and gotten back up to this level, right close to it. So that's 100% retracement right here of this minor cycle right there. That to me declares that this period right over here is a bottom. Now the question is that this declining phase right over here that takes you out to the third week of June, which is where I really thought the bottom was going to be, well, that might only bring you a minor decline into this minor support zone. It could bring you a full-fledged sell-off right in here if something really goes wrong, but the likelihood of that is much smaller. So we have raised our targets. We had them at a test of 27.27, that right over here, even lower than that before we had the big rebound, but now it's very unlikely. Our low timing is June 17th to 21st, but now the odds have increased that the bottom is in place. That makes it more likely that we get a test of minor supports between 28.32 and 28.79. That's this right area right over here, but these minor supports. We're going to call for a down week for the stock market. In fact, that might even occur. We're right now around midday here on Friday, and it could start today, this afternoon, because this has been so huge. It's moved through the short-term sell zone, but now has gotten right in here into the intermediate areas, right there, and that cycle peak resistance. We think it stops here and then gets into this correction that takes you down maybe for about 5 to 8 trading sessions, and then moving up again. This period over here should be significant. We think this is the launching period for the summer rally we were expecting, and it's just a matter of how deep this next correction gets. This to us is a buying opportunity, and we're likely to see the market, this right in here, give us some really good stocks that have made important bottoms, real good opportunities in those stocks that we see having made those bottoms. So this to us is a key time, this next 5 to 8 days. We strongly believe the bottom is in place. That's not a very bold call with S&P's up 150 points from its low, but it's still, we want to look for this pullback and get the best opportunity we can. So I'm bull bear agnostic. I always look at the patterns, and what I can see right in here, you see this little blue arrow that shows you that this negative momentum that brought the big break is now neutralizing. It still hasn't closed the day out, so we'll see how it ends up. But that is, I think, a really good sign when you look at that. For those of you that watch my favorite pair, the projection oscillator gave this sell signal right over here, and then the market big break came. But now the projection oscillator is hovering way up over here and showing signs of strength where this blue arrow is. So we are now losing any opportunity for sell signals in here, and we get this neutralizing momentum. When we look at that, I'm going to show you a special right now as I look at the NASDAQ right over here, and you can see the NASDAQ moving up through the what we had shown you, but momentum is still negative in the NASDAQ. You can see it, and it's a long way from neutralizing. And for the Russell RUT, I want to show you the momentum in there. This is still negative also, though it's a little bit better in getting up into the sell zone. So I'm showing you a lot more than I normally do. And the reason that I'm doing that is because I want you to see that while the S&P momentum has neutralized, the other major indexes have not. And that makes that sell zone and the likelihood of the pullback that we're talking about in the next week higher. So S&P 500 giving the first warning of that bottom and the summer rally coming, and the rest of the indexes not yet. That says to us that this next 5 to 8 days is a risky period. You could still get a sharp pullback in here, but that's likely a very, very good opportunity. I want you to become an askSlim member. So go right now to the askSlim website, and if you just want to become a free member, fine. And then you'll learn more about our content, and then you'll step up later. But we have unbelievable things coming up, and I want you to take advantage of that and learn about everything that we have to offer at askSlim. Be so careful. It is so crazy out there. I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a steady show.